Hey, greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for Monday, November 3rd, 2025. Well, we enter what is usually one of the strongest months of the year on a major winning streak for the U.S. major averages. Uh, Question I have is how long is that going to go on with the numerous breadth issues that we've been seeing? And on the first trading day, what do we get? Another Hindenburg signal. So um, it is an interesting day, and it'll be interesting to see what happens the rest of this week, in my opinion. Earnings are out on the day. Palantir actually had great earnings, but is trading about $7 now below where it closed on the day. So it'll be interesting to see how the market perceives that. Um, they beat on earnings, they beat on revenue, and they guided higher. Yet they traded up initially from about 207 to 220, and now they're down after the press conference to 200. That's probably a bad sign of the market. If you, like me, own any of that IRIS, IREN, um, one time Bitcoin miner, now data center, and energy provider. They signed a huge deal today with Microsoft, which drove the markets higher at the open, the futures, especially the Nasdaq. Looking at the futures right now at 645, Dow down 55, Nasdaq down 35, S&P down 7, and the Russell, which was down significantly, kind of significantly on Monday, is actually trading a little bit higher. Let's take a look at the volumes today before I get too deep into this. I like using market surge volume just because I've used it for so long. And volumes were a little lighter than average. Okay. All right. So let's take a look. Again, my name is Jeffrey Scott, marketmripro@gmail.com. My Google group is called Top Down Trader, and my website is marketmripro.com. This is for educational purposes only. Anything I talk about should be in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. As trading stocks and options should be considered risky. You should always consult with your financial advisors before making trades. And we'll be seeing a launch of my MetaStock tools later this month. Talk to them today, coinciding with a big release for MetaStock. My Google group is called Top Down Trader, and you just go to Google Groups, look for all groups, and then look for Top Down Trader. It's free. I'll give you discounts on my stuff. You'll get member-only programs. You'll get access to things before I stick them up on YouTube, and sometimes I don't put them on YouTube. And when I travel with the missus, the Dr. Mrs., since she is counts as a doctor too, um, I am not allowed to make noise in the hotel room, so I will be cutting and pasting and doing my reports um, through Top Down Trader. Um, Always important to know your news and earnings. News, we'll get a Fed speaker tomorrow, but we won't get trade deficits, factory orders, and JOLTS job openings. On Wednesday, we will get the ADP and the PMI and the ISM. And then on Thursday, we have lots of Fed speakers. And what we won't get is jobless, productivity, and wholesale inventories. And on Friday, we won't get the monthly employment report, which is a big missing piece. Big week of earnings. I talked about Palantir a bit because that's one that I have holdings in. Net is kind of flat from where it started the day, but I hate to see things jump up a lot and then finish lower. Um, Sarepta down 39% was probably the big mover to the downside, and Palantir is down a little bit on earnings, which is a bit surprised. And I guess for those of us that grew up eating Denny's, and I think it was called the Grand Slam, I guess they're going private. Some company called Tri-Artisan Capital Advisors and two other entities taking Denny's private. Big earnings tomorrow, Uber, Shopify in the morning, Pfizer, Hut 8, which is an interesting story. Um, this morning, one of the Bitcoin miners turned energy producers, um, other than IREN, also had a big move as well, announcing a deal, I think, with AWS. Hut is probably the next one to do such a thing. AMD in the afternoon, that'll be a big mover, especially with the AI stories going around. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. I put this up over the weekend. I invited the folks that did the live meeting with me to do my weekend review with me live, and then I turned off the camera and we talked about options and how I trade them. I showed him this graph here, which looks at what happens after the S&P after an S&P 500 has a Hindenburg omen. Well, you get them on the NYSE typically, so this is just plotting on the S&P 500. And what we pointed out was that a year later the markets were higher, but at all the interim, like for example, 2 months later, markets are down an average of 6.38%, only up 17% of the time. And then I looked at today's breadth, and I came back to this chart, and I think there's a story here that I'm missing. And the story here that I'm missing is the big ones on this chart. This is only from 18 forward. The 2019, 2020, there was a cluster. Some of these, there was just a couple of signals firing. Not quite a cluster in 22, but that picked it up. Now, interestingly, this 20, well, this was 24, but 24, we saw this start in the beginning of the year, and this one here in 25. And the Hindenburgs I was seeing were on the NASDAQ. Now, the NASDAQ's not typically studied for the Hindenburg omen, so I actually did a video a year ago that actually asked the question, why not? But we have a cluster, and that maybe we should be a little bit more concerned. For anything that I talk about, information about the software, anything you need from me, just email me at marketmripro@gmail.com. That's probably the best one these days. If you're a Market MRI Pro customer, thank you very much. If you have any questions, um, my partner and Chief Technology Officer, Praveen, is there to answer your questions and help you with any installations issues at coding@marketmripro.com. All right, let's go take a look at the charts. So we'll start with the market breadth tool, or the daily briefing tool rather, which just shows what the market did. So the first thing is the Qs were up 0.5%, the spiders were up 0.19, and you could see they weren't really at the top of their daily range. Dollar was up 7 cents in the middle of its range. Russell was down 0.32, interestingly, at the higher part of its range. Diamonds were down almost 0.5% in the middle of its range. Volatility was down almost 1%, and Bitcoin down another 2.84%. You can see over 5 days that Bitcoin has really taken a hit, that over 5 days the VIX is up, and the Russell has led the indices to the downside, down almost 2%. We're losing the new highs. Pretty soon the new highs may get low enough that we don't qualify for Hindenburg omen, because you have to have 2%, I think it's 2.2%. But the new highs are down, the new lows are up, and therefore we're getting negative on the new highs minus new lows at 52 weeks on both the NYSE and on the NASDAQ. If we look over here, you can see that one-day change in the S&P 500 sectors. Discretionary led up 0.94. Why? Another big day by Amazon. Probably on that data center deal I mentioned. Tech was up 0.43, healthcare 0.14. The losers, communications, which typically runs with tech, as well as 0.73 on staples, then materials 0.62, industrials 0.44. If we looked at themes that were working, blockchain, renewables, robotics, Norway, artificial intelligence, semis, oil producers, cybersecurity, social media, cloud. So some of those tech names that we like. And if we flip this around, what wasn't working? Uranium, cannabis, genomics and biotech, these have been leaders. Copper, silver, metals and mining. So more rotation. And the question always is to me, or I always wonder, is this signs that we're rolling over the weaker market, or is it really just rotation? If you look at the S&P 1500, the NASDAQ, and NYSE, the colored bars are today's. The solid bar is yesterday. Sectors, less today than on Friday. Industry groups, less up than on Friday. And on the S&P 1500, almost half the stocks were up. NASDAQ, same story on sectors and industry groups, but only 36% of stocks were up. And on the NYSE, only 44% were up. So to me, that is a definition of bad breath when I don't even have more than half the stocks in the US markets trading up on any of the major indexes. That's concerning. Let's take a look at the timing model. Monthlies, as you'd expect, we've been in a monthly buy on the, frankly, on the S&P, and this was a head fake the one time we went out, but we've been in a buy since November of 2023 for 2 straight years. Even this horrible candle down here, which is probably April of this year, did not take us out because it's where it closes on a monthly that matters. So on monthly, we're still long. On the intermediate weekly, we are still long. How do I know that? Because my buy sell line is down here. On the daily is where we have some issues, and we are sell on the daily on. It's kind of weird that the times didn't match up, but all right, there you go. We're at a sell on the Russell, which we were over the weekend. We have flipped the bongo on the diamonds, but we're still well above the WMA. So how do I put this together? We're still trending up on the long and the intermediate. Short term, we're chopping. Chopping markets are tough. Chopping markets can eat up your hard-earned and won capital. Choppy markets to me are sometimes a time to raise cash, stand aside, and let a trend develop. Um, I am still long the market, as I talked about over the weekend. I still have a fairly substantial cash position, at least 50% of my total amount in the account. And part of it's I've had a great year. I don't want to lose it in a choppy market. And it's easy to deploy it. Sometimes it's easier to buy in for me than to sell. So I'm cautious here, to say the least, and I'll give you more reasons for that. Now, if I look at the weekly guppy charts, we're above the moving averages across the board, and that'll make me feel better. Um, we're going to activate the intraday time frame so you can take a look at that. But typically, when we're above all these different moving averages and the moving averages are in the right order, which they pretty much are, it takes a while for the market to roll over, and we're not rolling over here. If we look at the US market index ETFs, take a look at the spider. The good news is we are in a great uptrend. We talked about that over the weekend. We also talked about pulling back to the 50 would probably be healthy if we bounced and set up a nice year-end rally. It'd probably be healthier not to pull back to the 50, so I'm not saying we need to. Look at seasonality, both 5 and 10 year are very strong. And if you look at today's bar being up 0.19, we closed lower than we opened, but in a positive day. Kind of a nothing burger day to me. Um, Kind of waiting probably for some of these earnings to come out, especially with the volume not being significant today. If I open up the Qs, you'll see the same story. You look at it and it's closed lower than it opened, but it closed higher than it did the prior day, such that for a white candle and up a little bit, up almost 0.5%. And you could see the seasonality here is strong, and we've had a big run. And again, we're not that far away from the 50, and it's been a great place to rest in the past. First, you got to get through the 17, which could also be a nice place to take that pullback to if we get one. If I look at the diamonds, the same story. There's nothing nefarious going on here. A little bit of a pullback in an uptrend, still above the 17, strong seasonality. And again, if I want to be Super Bowl, I'd say this market's great. It's going to the moon, and it might. I just think a pullback to the 17 or the 50 is not the end of that thesis. It's probably going to happen before we set the new highs before the end of the year. But we'll see. Russell, not quite as strong, or it's just moving quicker in that the Russell today is sitting here, tested its 50 today and bounced and closed with a nice hammer. That could be a reversal candle, strong seasonality. I think the wild card here is going to be earnings. If we look at the VIX, and some people, myself included, were surprised that the VIX was stopping. VIX had a reversal today. It's a red candle because it's down. It's solid, meaning that it closed here lower than it opened. So it actually opened higher, traded higher, failed at the 17 and came down. I think that's probably good for the bulls to see that reversal. Certainly better than not seeing a reversal. And if you look at the dollar, which we talk about every night, and it looks like it's breaking out here, and it kind of is, but not really when you do that. And we've talked that my target could be perhaps in this area. That is the prior gap. I mean, the gap was kind of defined because it tried to close it some here, sort of in this area. Would be my target for that. And if it turns back, I think that would be good for the markets. If it rises up and it starts to retest up here, I think we'll be in a world of hurt before that even happens. Things that will get hurt if that happens certainly will be commodities, which have been strong. You can see gold is and silver are both trending higher after up 0.19 and down 0.5% today. After setting record highs on both of them, pulled back sharply and seem to be setting up to go higher. Oil struggling at the 200. And I can't tell you how much it pains me to say this, but maybe we got to start paying attention to natural gas. I gave sort of the bull thesis about it yesterday with the EU saying that they're not going to wait to the end of 27 to get off of Russian gas, that they would do it at the end of 26. Um, you know, this actually looks interesting here. I don't love buying things below the 200, and one would expect it to run up to the 200 and fail, but that would still be a 13 to 15, $1.50, it'd still be a 10, 12% move, and on a right designed option play can actually make you some money. And I think natural gas looks like it wants to go higher. 10-year and 30-year we watch as well, and you could see in the market today, 10-year. Oh, why did you tell me what it did? It looks like it's up a bit, 0.34, and a little bit more, about 0.5% up on the 30. Now the 30 looks like it's in an interesting place as it's running up to the 50 and failed, but a break above the 50 expected to get above the 200. We just don't want it bouncing up here and threatening the 5% range. But I think dollar matters here, rates matter here, and we'll talk more about the breadth in a second. If we look at the buckets, you could see we shifted to the left, meaning more stocks are below the lower Bollinger Band, but not to a great extent. 15% of the NYSE, 17% of the S&P 1500, 11% on the NASDAQ, and 12% on the Russell 2000. That tells me that short term we're starting to get a little bit oversold, but it's not saying to me that we're oversold enough. Now, on April 7th, I called the bottom in the market. I was probably an idiot to put myself out like that on YouTube, but here's why I did it. I'll show you what a bottom looks like. Pick the date, and then I go and I clip that little thing, and it's a lot of computations, but you can see here we were 76% below in the NYSE, 79% on the S&P 1500, 52% of the stocks were below the NASDAQ, and in the Russell, 66 were below. That is an obvious reversal signal. What we see today just says a market that sold off. It doesn't tell me that this is an obvious reversal signal by any means. Market breadth. Here's our little friend, Mr. Hindenburg. I think 4 in a row count as a cluster in my book. Now, the good news is here's the NYSE, a hammer on the 50. I can't think of a better place for us to hit and reverse at. But then look at the NASDAQ composite. It's a long way from that 50. In fact, let's see, we'll show, it's not set up to do that, but you can see the 50 is well above, the NASDAQ's well above the 50. Now, concerning things, absolutely. Stocks above the various moving averages are trending down. New high, new lows, negative. Advanced decline are negative. And up-down volume was mixed. Now, remember, NASDAQ said it was up today, and yet AD line was down, part of the divergence complex. Now, we didn't see a Hindenburg today on the NASDAQ, but 4 in a row on the NYSE. Again, maybe I'm too much a fan of these, but the clusters are the part that have me concerned here. And I'm concerned. If we look at my other breadth windows, another tool that I like to look at is the 13-week new high, new low. Now notice as the stocks have been hitting higher highs, even the Russells just off their highs, the new high, new lows have been falling, the 13-week new high, new lows. Now, turns out they got to get pretty low, close to zero to be a reversal signal, but 0.17, 0.30, 0.19, and 0.27 are well off where they were. This is the AD lines. You could see the NASDAQ's getting higher highs and the AD lines in the toilet. You could see the Russell is sort of sideways and we're going down on the AD line. The S&P 1500 right off all-time highs, and we are lower highs now than we were back there. These are a lot of breadth signals that should have some people concerned, and I'll put myself in that camp. Now, we looked at this weekend about looking at hourly timing model, and it's interesting that even with the rally this morning, because of the way that my timing model is designed, it doesn't flip that fast. And you could see even with the move this morning, since the 30th, which was Thursday, we've pretty much been in a sell signal on my timing model across all the major indices on the hourly charts. More reason, perhaps, to be cautious. I will be the first to admit that I don't usually use the hourly charts. I didn't look at them during the day. I am testing out to see if I should. And based upon my position trading, swing to position trading strategy, they've never made much sense for me to look at. So how would I sum up the markets? Dominant trend is still long. Chop is painful. Um, those breadth signals in that Hindenburg worry me. The fact that PLTR beat, earned, and raised a triple play and they're trading off today bothers me. That's not to say that they won't rally tomorrow in the morning. They do what they're going to do. Um, and I think that adds to me some of my concerns. So I'm concerned here. I'm still long. I raise cash. I've got puts on some of my bigger positions that are stocks and some of my options trades. If they had a lot of cash in them, I took them out. If they had a lot of intrinsic value. What else can I show you? If the ratio charts will show you that except for technology, everything looks ugly. Healthcare is sort of neutral. Look at how discretionaries come up as well. But you look at the true defensive staples, nah. Real estate, nah. And utilities is interesting. Utilities isn't horrible, but part of the reason for that is the data center build out. If we look at the JAS layout, and this is where I do my stock hunting, do I want to really look for stocks tonight? Nope. I'm thinking about what I want to be in the market and do I want to start lightning at the open, not buying a lot right here. However, most people are long, and we know that over the course of decades, the markets go higher. So let's look at potential longs. So my database today has 3,757 stocks. That's taking the stocks in the NASDAQ plus the Amex plus the NYSE and then filtering them for 100,000 shares traded today at $1. Why? To get rid of the junk that doesn't trade. Simple. There's still plenty of junk there that are less than $5, but not everybody thinks they're junk, so I left them in. Now, every stock in my data set has a sector and an industry group. Every stock. So I have 3,757 in my top-down analysis, which is different than what you might expect to see in the S&P 500 or 1,500. And therefore, the breakdown is going to be different. And we know that up, I haven't looked today, but the RSP, let's just look at the RSP. RSP today, the equal weighted S&P, was down 0.25, and the spider was up and 0.19, so there's almost a 0.5% performance between the two. So my sectors will look different. Let's go into top down. Here's the sectors, here's the industry groups. Let's look at percentage moves one day and utilities, energy, and defensive. Let's do the same thing here on industry groups. And these are only the industry groups, by the way, in these three. And let's take the top by change. That doesn't look right. Take the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Now we have here 120 stocks in these 10 industry groups. Let's filter it for $5 and 500,000 shares. We're left with 84. Now, one way to be is just look at all of them. I'm not going to do that today. I could look at the top movers, but I'm going to get things that probably are not actionable. New Era Energy and Digital, great move. Don't know anything about it. It's an IPO. Make sure we're on the daily. Next one down is NBR Neighbors. This one looked interesting over the weekend. Come on, Neighbors, where are you? Here you are. Come on. And you can see a nice move today after a little bit of a pullback. Oil services company were earnings out today. Earnings were out last week and they slowing growth with a negative surprise, yet it's turning higher. Trades at a very small multiple. What does it say here? Joint venture, resume work for 2 rigs. So positive news, some of their rigs are going back to work. Earnings are out. I like the move here. And so this might be something I might watch, especially if I think that natural gas is going up and oil has come off its lows. All right. BTU. I noticed this past week and the week before that on my list of look at me stocks, the coal stocks started populating. And I started wondering why. Now I know that we're getting into winter, and if we have a cold winter, that's great for coal. But then I started thinking when I read some of the details on the IREN deal, it's great to think we're going to power everything with nuclear. But I think we're going to power with natural gas and coal and other things long before we have enough nuclear capacity. And maybe coal's coming back in Fuego. Well, BTU's had a pullback to the 50 and a bounce. It was a better buy on Friday. Still looks good to me here. Had a momentum breakout in volume, relative strength turning up. What's the next one? OIS, I believe this is another oil services stock. Sprouts Farmer Markets, certainly a defensive play, down quite a bit. Pump, another stock that's in the oil services place. I always like to look at fundies to see when the earnings were. Earnings were the 29th, positive surprise. Even though they're negative growth, a positive surprise on both earnings and revenue. Well, that's probably why we saw a big gap and a move. Now, are oil services going to start to run? Maybe. AMR is another coal stock. Nice uptrend off the bottom, pull back to the 50 and a breakout today. I think that coal looks interesting, and CNR is one that we talk a lot about, and it's another coal stock which is looks like it's getting ready to break out. So that's one way of doing top down, sectors to industry to stocks. Another thing I like to do is change this and add pullbacks and uptrend. See, that makes it a little smaller, brings down to 25, and let's rank these on my impulses. So these are stocks that from a pattern have pulled back and started heading up, and they've got impulse today. So we already looked at OII, I believe, or was that OIS? I think we looked at this one already. Pulled back hard, now breaking out above the 50. Expro, another oil services company. SXC, Suncoke, a coal company involved in steel manufacturing. Car Holdings, I thought this was an oil. Now here's what you can do with my product. Just go over to description. Oh, come on, you're supposed to tell me what it is. I did something wrong. All right, it worked when I did it. There you go. Energy and infrastructure, refining, retail, and logistics. All right. Last earnings were up a lot with a big surprise, looking at $1.98 versus a loss of a dime. $41 stock, growth rate turning around. That might be interesting. Okay. Pays a dividend of 1.4. Neighbors, AROC is another oil services company. So in a bad market or a mixed market, you see a lot of these oil services companies. So that's certainly one thing that I like to do. And sometimes I find something really good here and I'm done for the night. I found one or two things I liked and I work them up and go and I'm done, close my computer and hang out with the family, which means my wife, unless my granddaughter's sleeping over. Another thing that I do like to do is just clear these, go back to the impulse view, and just run some scans. And I have built in, let me clear those. So there's nothing underneath, 3757. I have two really good scans that I like. I have a lot of good scans, but two that I like a lot. Some of my best stocks will come from the A plus scan. And this is requiring, let's put up one of the stocks. Let's look at Lyft, baby brother to Uber. And this is requiring these two blue dots. And these are momentum dots, the ones that are above the yellow line. I have found in an uptrend, when I see those two blue dots in a row, that typically the market is ready to reverse and start going higher. So here we are in an uptrend, a pullback to the 50 and a reversal. I love that. The S&P 500 versus the stock versus the S&P relative strength turning up over the moving average. The OBV turning up. You can see the OBV cross to date today, the relative strength cross today. It's been 13 bars since the weekly relative strength cross. That's really good. I like it. I think Lyft looks really good, and this might be one that I might identify for tomorrow. EXE, Expand Energy, formed by a merger of two natural gas superstars. Is this moving up because we think the natural gas industry is going to do something? Independent exploration, production, oil, natural gas, and natural gas liquids. Again, if this is true about Europe, then companies like this are going to have a new export opportunity. Chesapeake and was the parent, and they merged with somebody else, and they changed the name to Expand. So I mentioned natural gas. That might be one way of playing it. HSII is a buyout. Interactive brokers, well, stupid me. It showed up on my scan right here with the pullback to the 50. I should have taken it. It's breaking out. It's not overly extended. Earnings came out on the 16th. Robinhood comes out in the next day or so. We looked at Lyft. MGA, Magna International, showed up in my scans yesterday um, in the auto industry. And you could see $1.63 is going to come out against $1.69. That's not so exciting. We just had $1.33 versus $1.28. It's not a lot of growth. I like the chart, uptrend, pullback, and a breakout. Ryanair, um, earnings came out today, and they had a small surprise on earnings, but a big surprise on revenue. Stock gapped up. And then here's another one I like here, TBPH. I do some research on it. Earnings are out in a week, and that would be a negative. But what I liked about this is get run up, probably on news, sideways move and breaking out off of that 50. And we could always click up there, which is a better buy. If I wanted to read that, I could click that and pull up the story and read it. I'm a technical guy, and technicals look pretty good. Looks pretty good to me. So that is one of my scans. So we identified TBH as looking interesting and Lyft and iBaker. I love it. Interactive Brokers. It's already started to run on me. The other scan is the A scan, and the A scan requires a pullback, but you're in an uptrend. It requires you to be in an uptrend. It requires you to have a squeeze, which is that yellow line, and then on today's bar have a momentum or a breakout. And it requires a relative strength in OBV to turn up. So AMG was not on our other list. Here's your pullback. Here's your breakout. Massive volume coming out of a squeeze. Relative strength and OBV look good. Wow. Let's see what it says here. This must have had earnings today. Earnings today, surprise on earnings, not much on revenue. Teeny weeny dividend 7.8. What do they do? Asset management, providing investment management services. Okay. All right. And they're based in West Palm Beach, right by me, by my office. So that one looks interesting. Not a cheap stock. CMPO. I'd have to read the news. I'm just looking for something. This is one I thought was interesting. HTHT, I think of this as like Holiday Inns of China. It's a Chinese hotel. And here you had a pullback, fail breakout pullback. It looks like it's ready to go again. Volume breakout momentum coming out of a squeeze with relative strength and OBV. That looked interesting. Here is Iris, which I mentioned before, IREN, I used to call it Iris Energy, and breaking out of a wedge, but really on just massive news with their 8.2 billion or some absurd 9.7 billion 5-year deal with Microsoft. IREN stock up over 20%, 2.91 gigawatts. Interesting. Bitcoin miners become plays for data centers. MFC, Manulife, right? Kind of going sideways. Here's Ryanair again. Here's that Theravance, which I know I like. PERN, big gap up. Pharma stock, so it's either earnings or news. It's probably not earnings. Let's see what the news was. Potential disruptor in CML treatment landscape. Unprecedented phase one. Well, as a cancer doctor, I'd say that's pretty impressive data. The fact I've never heard of the company should say something. Um, but that is impressive data. But how many years before this drug could come to market? It's in phase one. And it'll be presented at ASH, so the stock potentially could get a big boost when it gets some publicity in December at the American Society of Hematology. Interesting to know. I just think it takes a long time to get approved. What's their market cap? I don't know because it's a young stock with no money. And then Unity Group, nah. So of the ones that we looked at tonight, I mean, AMG is kind of expensive, so I'm not going to push that to people. I think Lyft looked good. I think the TBPH looks interesting. Look, I'm not advocating buying anything here. I'm just showing you some of the patterns that I like. This is education, not investment advice. I have an MD and I've got a license, but it's to practice medicine and surgery, not to teach you how to trade, not to tell you what to buy. Anybody can teach you how to trade. That's not a license requirement. So, hope you like these um, walks down the market. Beware of that cluster of Hindys. Please hit the up thumb if you like this. Give me a little bit of love so that maybe eBay, wrong company. Maybe YouTube will um, put me on more people's feeds. If you got remarks, either put them in the section. If you don't want to put them in the section, email me at marketmripro@gmail.com. Hit subscribe, hit the alarm, join Top Down Trader, and come visit me tomorrow.